Welcome, everyone. We have another great trade of the week for you. Oh, this is a nice trading opportunity, in my opinion. This video will be short and sweet, right to the point. So let's get started. Risk disclaimer. Read it over, and let's go. Trade of the week. Which pair is it? Dun 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 dun. CAD yen. CAD yen is the trade of the week. So, how are we going to make money off of CAD yen this week? We will get into all of that. First, we'll check out Forex Factory calendar. And we do have Bank of Japan policy rate, monetary policy statement, Bank of Japan press conference this Thursday. All right, so that's pretty big, right? It's pretty big news. Some of the headlines you're going to read, right? Recent headlines coming out of Japan. Japan likely sold treasuries to fund record yen intervention. Reserve holdings of foreign securities drops by 50 billion. Willingness to sell US bonds provides Japan with FX firepower. All right, so if they want to intervene, they can. Prime Minister calls for the Bank of Japan to be vigilant to the impact of the yen's depreciation. All right. He calls for growing concerns that a weak yen is pushing up households' cost of living by inflating the price of imported food and fuel. And this could reflect in the yen over the next 6 months to a year. The yen has weakened by about 10% to the dollar since the beginning of the year, and the impact of this depreciation may be reflected in inflation over the next six months to a year. So if we had to put yen and CAD into dovish and hawkish categories, we would have to put CAD into the dovish category. We would have to put yen into the hawkish category. All right. CAD has 6.2 unemployment rate. All right. GDP is flat. They just cut rates. Bank of Japan is having increased concerns about the depreciating yen. And over the next 6 months, where Bank of Canada can be seen cutting rates, Bank of Japan is more hawkish, right? Over the next 6 months, Bank of Japan is going to be more hawkish than the Bank of Canada. So if we had to divide these two up into two categories, it would look something like this over the next 6 months. All right, and now we will get into technicals. And when we look at CAD yen on the weekly chart, you can see that we had a push up into the extreme. Quarterly R2. All right, and now we could be making a lower high because you have another push up, and now we just got a weekly close below our previous week's low. All right, and it's left us with that order block right there. Now, when we take a look at COT data, right, what is large spec doing? And large spec has been holding a large short position in yen. That's kind of been no secret. But it's kind of interesting right now because you had another push down in COT, and we do have a potential higher low here. All right, in COT data, large spec is the green line down there. And could this higher low mean the potential of unwinding some of these yen short positions. All right, so back to the weekly chart. We are also at an extreme on the weekly chart. And where on the COT report, we're potentially making a higher low, on the weekly chart, we're making a lower high at an extreme area. All right, so when we dive down to the 1 hour chart and we look at that order block, kind of looks something like this. And we have weekly pivots on. We have our weekly R1, we have our pivot point, and our weekly S2. And we have two patterns right now that we're working with. Two high probable patterns on CAD yen. One would be this impulse to the downside. And if you saw my weekly Forex forecast video yesterday, we went over CAD Swiss and how it was my trade of the week last week, and it was my favorite pair, and how it just opened up the market, made a quick run and flat and dumped. So CAD yen does have the technicals to do this, because you have a complete flat pattern, a 1 hour impulse down, and you're flagging. So is this thing ready to just start making lower lows? It could, right? Technically, you're set up for that right now. You have an impulse down, break structure, an ABC, and we could be ready to go, and it might want to start running down. So that is one possibility. The other possibility is we're making a WXY corrective structure up into our weekly midpoint and our weekly R1. All right, so these are our two most likely scenarios. We start running right away, trending down, making lower lows, ABC flat, and we go. Other option is we slam on the brakes and we make another correction up into weekly R1 and your weekly midpoint. And that would run us right up into this weekly order block. So there's a couple ways to play it, but the simplest way to play this CAD yen trade is simply by cost averaging in. All right, if we cost average in, then we can catch the initial move down if it's going to run down straight away. And if it makes the WXY, we have another order waiting at our weekly midpoint at the order block. All right, and you have to make it so you can manage your risk. You don't want to see a close above the weekly order block. We don't want to see a close above the weekly candle. And this would be a very tall task for CAD yen to make a bullish engulfing candle and close above the highs, since we just closed below our previous week's low. All right, so it would be a tall task for this next week's candle to close above the highs. So if we cost average in, this would give us the opportunity to live through the news event as well. All right, so by simply putting an order at market open, sticking another order at the weekly order block and your weekly R1, you're set up for the move down. And you don't have to worry about the right. If you get a weekly close above the highs, then you just shut the trade down, right? And you take the loss. But this is trade of the week, and we will be putting it on. That's all I got. Take advantage of it. Have a good one. If you like what I'm doing, hit the thumbs up, subscribe. See you next time.